This is the S&P 500 one-day reading for January 3rd, 2023. It's currently December 4th, 2022, 10:22 p.m. Eastern Time. The overall theme and behavior, we have a notable decline on the scale of a multi-day chart. We'll have a notable decline standing out on the 3rd. Behavior around the high. It looks like we also revisit a support level that was recently a past opportunity on the scale of a one day, like it could be within like maybe 10 days. And then the behavior around the high, we have sideways fluctuations with a bullish trend preceding a decline. So that decline is what forms that high after some sideways fluctuations into it. This is also the low card. I put a note, low card on the 4th. Interesting. Interesting. So it's likely that the high from today, from the 3rd, will be the low price level on the 4th, very likely. In any case, there's behavior around the low. There's a U-shaped dip that forms between the intersection, or near the intersection of two perpendicular diagonal trend lines, and that U-shaped dip will form the low. The high and the low are within close proximity to each other. I'm advised. There's no trade advisements really. So, well, in the pre-market, we have a price level that's highlighted. There's a resistance level that's highlighted, and that's a good mean point for straddle or strangle. Utilizing options, that would be like the midpoint. So it's indicating that we'll see a higher price level and a lower price level than that resistance level in the near future. Making an opportunity there too. And there's also usually volatility there, and that volatility will give us an opportunity to position oneself in both directions if one chose to do so. Right around the close, that period of volatility, there's a sharp drop. Right around the open, there's a sharp drop in that period of volatility that comes out of the pre-market. That sharp drop will stand out on a one-day chart. There may be a little bit of a bullish move, like right around the open or out of the open, because there'll be a bullish move prior to the sharp decline, because the Hangman card indicates the halting of a bullish trend marked by a sharp decline through key support on a one-day chart, and that decline will then yeah, I'm picking up on a little bit of a rally there right around the open, which would mark a possible opportunity to open up a short position for a quick day trade. There's a sharp drop there out of the open, halting that bullish trend, and then out of that drop, roughly around, or after that drop, I should say, roughly around 10 to 11, or 10 to 12, I should say, there's a big move to the upside. So on a one-day chart, it'll stand out a big rally. We may actually hit a low there before that rally starts. So in the first half hour, possibly a rally, or excuse me, a low for the day, and then we rally pretty high. There's a high for the day midday. We poke above a price level, resistance level, just briefly. We stay above, or I should say, we stay above it briefly, and then we break back down through the same price level shortly thereafter. We decline to another support level, and then we dip below that support level, do a U-shaped dip, and come back and reuse that support level as support. And that would be all on the scale of a one-day chart there around midday. So when we fall from the high midday, we fall all the way to a low for the day. So it'll be the same price level that we met at the low of the start of the day, or it'll be lower, one of the two. And then we have a rally out of that low along a diagonal trend line, roughly around let's say 1 to 2ish. That rally ends though with a fast sudden move higher, and then a decline back, like a pop and drop, a fast sudden move higher, and then a decline through that diagonal trend line that we were rallying along. And we'll do that when we're near overbought territory on RSI. I'm advised to open up protection there. There's a day trade. There's a day trade. So from the high midday, or after that high, when we rally out of, after that we go from the high to the low and then we rally out of it, that rally out of the low is a good spot to open up a protection. For whatever reason, it seems like a better place than at the high. Probably some sort of behavior there that'll shake you out in between. But in any case, we sell from like a near overbought crest into a low at the end of the day. There's an opportunity there at the end of the day to cash out of the puts. We revisit a support level at the end of the day that was recently a past opportunity. Again, it looks like we break down right around the close. We break down through a key support level that we had recently broken down once before. So likely the support level that we broke down, like from when we broke down from the high down into a low there. Sneak preview for the following. Oh, and then we have sideways fluidity in the post market. So along that support level that we revisit, we'll have sideways fluidity, marking opportunity to open up with equal amounts of bulls and bears inflow and outflow. And I would say right around the close, there's an opportunity to open up a short position. Somewhere towards the mid to end of the day, there's a quick short trade there. And what's interesting is that okay, so I don't think that that's, like I said before, like the Chariot card might be today's the third's high might be the following day's low, but I don't see that actually, based on the fact that we have this correlation here in the yellow to the Ace of Wands from the last card of the prior of the last year's readings. And that's an opportunity that's a rally to open up a short position. So there's probably a little bit of a pop here. So an opportunity to open up, like do a quick short trade from like the high down to the end of the day's low. But there's also an opportunity to open up protection here at this like near overbought crest that you could hold overnight and sell right around the open. Probably right around the open. There'll be like a gap down is my sense. Yeah, there's going to be a gap down the following day. And then we have a sneak preview of some like price swings, usually bullish in nature. That's the 3rd of January 2023. Let me know what you think by hitting that like button. Don't forget to subscribe, my friends. We need your support. The best way to do so is to hit one of those links in the description below. It'll take you to actually we'll have a link there that'll take you to all the different places where you could support the channel through donation or through signing up for like a Webull account or something. We both get free shares of stock that way. There's a ton of ways, guys, but we do need your support. We're doing all this for free. The most and the best way you could support the channel, my friends, is if you regularly follow one of the monthly readings that we do. It would make sense for you to subscribe for the 1 month recurring subscription to that ticker, and that will also guarantee that gets done every single month. Also, when you pay for the ticker, you get the best trade that we see for the month in the ticker that you're paying for, whereas the free version doesn't have that. So that's a great way you can do it. In any case, guys, most of all, make sure you spend that money out of love. So long as you spend it out of love, the universe is going to send it back to you tenfold in all directions, my friends. I'll see you on the next one.